Good afternoon or good evening, everyone. This is David with David Trades 385. I'm doing I guess you can call it a special video, to go over market profile and how I use market profile with footprint charting and also the delta, negative delta, positive delta. I just had a great conversation with a longtime friend regarding trading, and we talked about market profile, we talked about footprints, we talked about the volume profile inside the footprint, we talked about imbalances, we talked about cluster imbalances, um, core high, low high, POCs, and volume profile as well. And it made me think to just do a quick video to share with everybody how I use the market profile with footprint charting. Um, so let me go ahead and share my screen. Always, I'm an IWM guy, so should see IWM on my screen. And I'm just gonna go over how I set up this morning, how I set up this morning, and what I marked on my charts before the session open for cash open. Again, my routine for anybody who follow um me on either here on YouTube or Facebook or Instagram, I have the same routine. I log into my accounts at 8 o'clock, um, just to have them logged in and open. I keep the chart open here at 8 o'clock, and I also open up my broker, which I use TD Ameritrade, which is now owned by Suave, I believe. Um, I used to use TradeStation. I've moved all of my money out of TradeStation, and I don't use TradeStation anymore only because I don't use retail charting, and TradeStation doesn't provide footprints for the moment. That may change, but for right now, they don't provide footprints. So I switched over to Go Charting, which is a web-based platform to get the market profile as well as the footprint chart. And I use TD Ameritrade as my broker. So just to go over kind of what I did this morning and what I do every day. Again, I log into my account and I log into um, Go Charting at 8 o'clock every morning just to have it up. I don't come back to my laptop to roughly 8:45, 8:50. And that's when I actually start to look at the footprint chart. I'm sorry, this is not the footprint chart, the market profile and the footprint chart to find areas of interest, POCs, or high or low. And then I just wait for the market to open. So to kind of go over kind of just a step by step of what I did today. Again, after I logged in, I came back to my laptop about 8:45, 8:50-ish. And we're gonna pretend like today didn't happen, right? So let's move this over if I can. Actually, let me have volume profile for a second. So we're gonna pretend like today didn't happen, right? So that's gone. So this is yesterday. And let's see if I can move footprint back over there. We open roughly two. Okay. So this is yesterday's action, the 27th. So the first thing I did this morning, once I got back to my laptop, is I wanted to mark my poor low and my poor high and the value area. So value area is pretty much whatever's inside the poor high and the poor low. I like to use the higher nodes as a value area. So first thing I want to do is mark my poor high, the beginning of my poor high, or value high, depending on who you talk to. That's the poor high. And let's see if I can do this without having to move yeah, I gotta move it. All right. And then I mark my poor low or value low, again, depending on who you talk to. Terminology may be a little different. So I have my poor high and my poor low. Now I want to mark my value area. everything in the blue is value area, but I want to mark the higher nodes, right? So the higher nodes would be, in this case, roughly 204.74. See, I've been having issues with getting this thing to mark for me. Hold on 1 second, guys. All right, let's see what let me do now. 204.75. There we go. And it's all the way down to 204.28. So I have my value area from yesterday, right? I have my value area, the higher nodes, 204, what I have, 204.75, and I have it all the way down to 204.27. Now, this is all the market profile of yesterday. This is the movement of yesterday. You have the high, value low, or again, depending on who you talk to, terminology, poor high, poor low. And then you have your area of interest. You have the POC here, which means there was in this area between 204.60 down to 204.44 roughly were the most contracts traded, whether it's options, whether it's straight stocks. This was the most activity of yesterday. I like to highlight the areas that poke, I guess you could say pokes out, right? The higher areas. To me, that's the area of interest. Well, not to me, that is the area of interest. Right. So that's the first thing I do. Now, once I have that marked, let's go to today's action. And it removed it again. I got my high. All right, let me put my low against. I may have to reboot this thing. It keeps removing. Okay, now we have both of them. We have our poor high and our poor low. What I would like to see is a reaction of poor high, poor low. My first thought seeing this, right? Seeing our area of interest, we have a poor low, we have a poor high. Um, my first thought is to sell the market, to fade the market. A couple of reasons. One, this is an area of interest, right? We've gone up this high yesterday. We've gone up from 204.88. Actually, let me add the footprint on here. We've gone up all the way up to 205.45 yesterday, right? So that's the poor high. And then we came back into that area of interest. We actually went down yesterday, 203.38. That's the poor low. And we're opening today inside of that poor low. So you may think, okay, since we're low, we'll buy up. And it's potentially you could do that. But because we're in this area of interest and the last activity was kind of rotating around this area of interest, there was no pop to the upside or fade to the downside. My thought was to sell. Now, like I said, just because I'm thinking that it's gonna fade doesn't mean it's actually gonna happen. But the likelihood of it fading to the downside is greater for two reasons. One, we have an area of interest where price fell from the highs down to, and then secondly, on Tuesday the 26th, the market profile didn't make a high. It didn't make a poor high. It was only area of interest and a poor low. So the likelihood of us continuing up, at least, let me say the likelihood is possible. Anything is possible, but the likelihood of us continuing up for the first half an hour to an hour in the market is not likely. There's going to be some kind of pullback. That could be a pullback of all day, which it did happen and went to the upside and then fell all day or down at the end of the day, or it can be for a few moments. Again, if you follow me, I don't hold positions all day. I'm only looking for moments. I'm not looking for all day plays. So going into the day, so now seeing that marking our area of interest, Marking out poor high, poor low. Let me hide that because I don't like seeing that when I trade. It was just being patient. Now, today I was a little quick on the draw, and I didn't get in at the right time, but I got in at a time to where I at least got half profit. And it was two opportunities. There was actually three opportunities you could have faded the market. One was the one I played. We let the market open up and see what it's going to do the first minute. Right? We don't make any plays unless we see something that just looks really good. We try not to play right at cash open. We let it give it a minute or two. I knew that we had poor high. I'm sorry, this was poor low, but we had an area of interest here. I was already thinking to fade. Market opened up. There was 206,000 sell orders here in this candle, right? But what I like to see is I want to see the market profile show me that. I want to see the sellers come in. I want to see buyers get trapped. As the first minute finish, we get to the second minute, and yeah, we come into this area of interest and we fade down. And I think that's what I started to play in actually. I think I jumped in this candle, which I was a little fast on the gun. What I should have jumped in is on this candle. And the reason I should have jumped in on this candle was because not only did we play the area of interest, but there was some rejection there, that rejection candle, that tail. But you can see there was some trap buyers in there, right? We went from 8,000 buyers at the top of this candle to 11,000 to 21,000, right? But the candle itself with the volume profile inside of it gave us a nice P shape. That P shape is telling me that there are potentially some trap buyers here, and the seller's gonna start jumping into the market. You can see we come up into this area of interest, and the sellers at the top of this candle said no. You got 25 against 18, 10,000 what was trap it was trap buyers here. And then you have 18,000 against 15. No and maybe I'm not explaining this correct. I need to maybe write up something. Another kind of a clue that there would be some trap buyers in this candle here. They were a cluster of imbalances. 12,000 sell orders against zero. 6,000 against 350. 6,000 against 2,000. And then at the top of this candle, we had 21,000 buyers here, right? 21,000 buyers here. But the sellers came in at the top of that candle, made a P shape for the volume profile. The next candle tested it and then dropped. And then we dropped the second minute. And in the third minute. The third, I believe I either made half goal here or here. I can't remember. But I made what I did. I think I got in at 86, so half at 96, moving my stop for the second half at 88. And I think I got out at 89. So I got half goal here for that little 1-2 minute play. All right. Nice little setup there. Trap buyers here, here, here. That 21 turned into 2, and we down to the downside. We're fading down. Second opportunity. We got buyers coming in trying to push the market higher. All right. 639, not too much. 900, 5,000, 14,000 to 2,000. Now, the reason this is a second opportunity, again, we're in a value interest, right? Area of interest, I should say. On top of this, we have a poor high, meaning price went up this high. What was yesterday, the 27th. As we approach this area, you can see there's buyers here. See green positive delta, a positive volume here on this candle. Negative volume as we enter into the area, That's a nice little P shape there too. Here's the opportunity here. There's a nice tail there. We went from 953 buyers there, 5,000 buyers, 14,000 buyers to 2,000 buyers. And another clue, we got a buy imbalance here. So these are sellers, I'm sorry, I say buyers getting trapped. And then, but at the top of that candle, the sellers came in and said, nah, we're in a nice area where we should sell. They made a nice P shaped, meaning the sellers were at the top of that candle, said, nope. Very next candle, what do? We drop 1 minute, drop 2 minutes, drop 3 minutes. The 4 minute, we dropped all the way down to 203.95. That was the second opportunity. And I believe there was a third one because I believe we came up pretty high. If I'm not mistaken, I think tested we tested this poor man high. Oh, that poor man, but poor high. We're at 10:30. So after an hour of the market, I stopped looking. But looks like here's another trap. Here's another buyer's trap here. We're getting to that poor high. We're testing it, but we're not breaking it. 11,000 buyers there, drop down to 4,000. Here's 23,000 buyers, top of this candle. Sell imbalance. So they're trying to, you know, push the market higher. Very next candle, we get that nice P shape, meaning the sellers are coming in saying, nope, we're not driving it higher. Trap those 23,000 buyers with that 5,000 and that 7,000. And we take a nice little drop down from, let's see, 205.16. And how far did we go? Looks like we went all the way down to 204.71. We not only do we see some trap buyers, we see some stops being hit or activated. People are jumping out, getting nervous, and we drop even more. Okay. Look like we tried it again. Stops get activated there or get hit, and then we drop more. Stops get hit there, and we drop more. This was a monster one here. Stops got hit there, dropped. Okay, so that would have been a nice play at 11. I think that's the one I logged back in for a hot second to see, but I didn't play it. But that was the third one. The third one was actually the better one that gave you the most profit to lock in as it was dropping. But I just wanted to do a quick video. Hopefully that explains it. Again, I'm not a teacher, but I try my best. If I didn't explain it right, or if you guys have questions from this video, um, try to not try to, but please send me all your questions. I promise I will answer it. Tomorrow I'm gonna start my video a little earlier, and I'm gonna go over how I set it up uh before we cash open, before we actually play. All right. So again, I hope that helps. Just going over market profile, the value areas with the poor high and the poor low. Waiting for the opportunity. I know I say a lot of times I want to wait for the buyers to come in. I want to wait for sellers to come in. This is what I mean. Excuse me. Let me go to beginning of the day. This is what I mean when I say I want to wait to see if sellers come in or buyers come in. This that P shape. All right. That means sellers came in at the top. There's a reason for it, some confluence. Tail. We got buyers getting absorbed, and then we fall. That nice little P shape there. And it's the opposite for buyers. It's like nice little B shape. But you should say there's a reason to buy. That was the poor low, and it bought up. You can see buyers stepped in right there, made a nice little B shape. Means buyers stepped in at the bottom. Zero print. That was a good little clue right there. Zero print there. zero print there. Nice little clue there that buyers were stepping in. You went from 7,000 to 9,000 to 3,000. Nice little clue that the buyers were stepping in there. And you could have brought that to the upside, caught a nice little moment in time. Look like would have gave you a lot too. That little clue right there. Just say you bought it at the open as it dropped, maybe took it at VWAP. Just say you got in at 304.10 and locked in profit as it went all the way up to 304.71. That would have been a nice day for you. And then your clue to get out of it, sellers were coming in. So you probably would have got it out of it here. Sellers were coming in. If you didn't get out of it there, it gave you an opportunity to get out of it here for a nice little day. So hopefully that explains how I use market profile, how I use the footprint chart, and what I look for in the morning before cash open. Again, if you have any questions, don't hesitate to hit me on uh, YouTube, Facebook, Instagram, and I think I have all of those things on my profile. If not, I will add them. But until tomorrow, I'll see y'all then. Peace.